It's interesting, these meetings. It's almost like, it's the fourth industrial revolution way of sitting across a table and talking. So it's much more informal than, for instance, a webinar or presentation where everybody's just, watching. The whole interaction thing is very important for me. Right, Ron is recording. So if anybody, there's some misunderstanding or anything, or you need more questions, you need more answers, you have more questions, then you can either listen to it again, just let Ron know, or you can just let me know. I'll share my email here as well a little bit later. Right. Let's get back. I'm going to skip a couple of the presentations, right? Like I said, because we haven't got time. As we start, before we actually start, going a little bit deeper, I want to prove to you that it's possible to make a net profit over a series of trades. Very, very important principle. With any business, you have to make sure that you do your homework. The same with this business. Stay away from the entertainment sites. Here's a business, do your homework properly. Right, this is how price charts looks. Now, to a guy that doesn't understand the language of the market, doesn't understand the structure, this looks like just a line that randomly goes up and down, but it doesn't. The randomness is apparent. If you look deeper, there is structure, there is a construct, and there is patterns and rhythms and stuff like that. So, just like any language, it's got a structure and nouns and verbs, and if you get to know them, then it makes sense. If you don't know them, then it just blah 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 blah, right? What happens when you get to know the language? The language is actually very simple. It's based on only 3 letters or 3 concepts: uptrends, downtrends, and ranging markets. Uptrends means, we go a little bit deeper later. Uptrends is when there's higher tops and bottoms, and this is a price chart, meaning there's people buying and selling. This represents a price chart. Or the price of something. In this case, it's the price of Euro USD, a currency pair, but it can just as well be the price of gold, silver, bread, cars, wood, bananas, tennis rackets, tennis balls, anything, right? So where people are buying and selling, if there's not a lot, then people are willing to pay more, then the price goes up. There's more buyers than sellers. If people has got a lot of things to sell, but there's not a lot of people buying, then there's more sellers than buyers, then the price goes down. It works everywhere where people, interact, where business is done. Very, very simple concept. Like I said, in all the asset classes, guys, from houses to businesses to commodities, to cash, to investments, all these type of things. People buying and selling, and if there's not a lot of people buying and selling, then you get these ranging markets. Like I said, we look deeper into it now. What are the traders doing? A successful trader understands this. He understands the structure, and he identifies. That's what technical analysis is. It identifies the early stages of a next trend, and somewhere there, according to the method of strategy or recipe, you can call it what you want. Somewhere there, he takes a calculated risk, and then he simply manages that risk. Now you can see I spotted here 1, 2, 3, 4, 5, 6 of them, 7 of them actually. Now, if you consistently, not ever worrying about trying to predict the price, if you consistently took a calculated risk somewhere here, here, all 7 places. Here you made some profit, some nice profit. Here you made a small profit. There you made a nice profit again, a small profit, okay, nice profit. And then over a series of trades, you get the ability to make a net profit. The market is not always trending. I just chose a trending stage of the market, but sometimes there's ranges, and then you take a calculated risk and you have to protect your account. Nothing wrong with that. When the structure changes, we protect our account and we get out and we wait again. Listen to the market. Successful traders take what the market gives them. They don't try to force the market, to do anything. That's not good, because the market doesn't listen to us. Obviously, it's almost like the ocean. If you respect the ocean and the principles upon which it works, then there's a lot of opportunities. It's a very supportive environment. Then you can, play in the waves, and you can farm with fish and all sorts of opportunities. The market is the same. But if you don't respect the ocean, then it becomes a very, very dangerous place for you. And the market is exactly the same as well. It's a supportive environment for people who understand its language. When the word respect there is for me a very important concept. Successful traders respect the market. They listen when the market speaks. The guys that don't do that will be entertained with all sorts of things, but they will pay for that entertainment, right? And that's at the core of when you learn to evaluate or to choose successful traders. We call them strategy managers on our copy trading system as well. Then when you choose when you have the ability to choose them, that's what I teach you. Is how to recognize guys that do respect the market. I call that a solid foundation. Somebody asked here, what is price action? Price action is simply the action of the price. The price goes up, the price goes down. It can be represented in a couple of ways. This is a line chart. It can also be represented in candle charts and so on. I'll show you a little bit after, a little bit into the presentation. Just checking the time. Right. So let's continue. The whole process, the journey that you're going to follow is almost like building a puzzle. You get different pieces, you get different pieces of information, and you have to go and process them. You have to go and think about it. How am I going to do this? Do I want to learn to become a trader myself? Do I want to build a portfolio of guys that can trade? Each one of those guys is an asset to me. I invest money there, calculated risk, and then they produce for me. That's what an asset is all about, right? So there's two ways of trading. Like I said, the one is directly, you learn the language of the market yourself. The other is indirectly, you build a portfolio of guys through a copy trading system, and we've got an excellent one for you here. Doesn't cost you any money. You just the profit share is just when somebody makes a profit. That's very important. If the guy doesn't make profit for you, you don't pay him anything. That's not like the old way of doing things where the guys take their management fees even if they don't make anything. Right. So like I said, guys, our time is short, so I'm going to go a little bit quicker. The first person is the guy that wants to invest. He wants to have an asset. He wants to choose an asset. He's new to Forex. He doesn't trade himself, or he's got no experience. Then you've got the strategy managers. That's the guys that are willing to share their experience, like Ron and them. There's many of them on the system that you can choose from. It's it's simple, it's open. Just need to be to train to how to to do what to look for when you choose somebody. Then I'm just looking for questions now and then, but I see you're silent guys, you're listening. Right. And the most important thing for me is you must be able to manage your risk, because you are going to take a risk. If you either start trading yourself or you you choose a strategy manager to trade for you, there's risk involved. And before you take that risk, learn, do your homework, get the skill of understanding a little bit what the guys are doing, right? So, and the platform we have allows you to do that homework. It allows you to see how these guys trade, what is their return charts. Very, very, very important, right? So we're not going to focus on that today. Today's more overview, but I've got presentations, recorded webinars, and we can speak if you contact me about going through these steps. I've got 7 steps how to choose a guy to make sure if he's got a good foundation. Right, and profit sharing is what happens when that guy generates profit for you. If you've linked to him, you have $1,000. If he makes profit of 500, then he gets the profit share. In this case, 10%, 50 goes to him, but the rest stays with you, the 90%. The average is between 20 and 30%. So you get the lion's share, you win. This guy makes profit. He obviously trades his own account. He's got the profit, but he also gets a little bit of profit because he's making profit for you. So everybody wins. Very, very important principle. Right, and ForexTime gives the platform. They get the commissions. The whole thing must be sustainable. Otherwise, it just doesn't work. So that's one of the characteristics of one of these, or most of these schemes, is they're not sustainable. So that's part of why doing your homework is very, very important, and also starting small. test before you trust. Very, very important. We've got demo accounts for those things. If you start trading yourself, you must prove to yourself on a demo account that you actually, you've mastered the skill. You can make a net profit over a series of trades before you go live. Very, very important. Right. I think I've already explained a little bit about this. Learning is happens through repetition. So I'm quickly going to go through this again. What I call the foundation of online trading is understanding the language of the market at early stages of the next trend, strategy, method. I just chose method here because I like 3 M's: method, money management, and mind. I like M&M's. I'm a chocolate guy, so that's easy to remember. So the method here entails listening to the market, knowing the structure. We look at trends now a little bit. Right. I see some questions popping up. That's good. Keep them coming. I'll get to them now when I finish with every section. I'll check. Right. Listening to the market, the method, the strategy, the recipe. How do I take my calculated risk, or how do I see the early stages of the next trend? And then money management, risk management. How do I manage that? I don't care how good your method is, how good you can see those early stages of the next trend. If you don't take a calculated risk, if you trade with too much of your account, if you don't manage your risk when you do get profits, then it's not going to work. Ask me, I know. So, but when those things fall in place, it does work. And the most important thing of all is your mind, that practice, that muscle memory. Guys make the same mistake. Well, they make actually a mistake that if you do it in the real world, then people would think you're very stupid. And the example I use is if you go to a gym and you go to your gym and you see, okay, you can bench press, let's say 50 kilograms, and you keep on exercising, and after a month or 2 or 3 you can exercise, you can actually push 80 kilograms. And then one day you decide, man, I'm going to go for 300. And you tell your friends, no, I can't put up 300. If they're friends, they would warn you, no, don't do it. But perhaps they do it and then you get hurt. Now that's the same thing that happens in trading. They train a bit, and then they go and put up a lot of weight. They too quickly put up, go with too much money in the mental pressure. Their mental muscles is not strong enough, and they get hurt. And then unfortunately they think, no, this is not for me. And they leave it, but it's actually, they just didn't respect the process or understand the process. Take some time off to heal, to get well again, and then just start, properly. Go from 50, 60, 70, 80, 90, and just push it up quickly. Respect that muscle memory that you need to build. It takes time, just like Ron said, it takes time. Even if you start a portfolio, be patient with yourself. This is like a new road you drive. When you drive, you don't know, you drive slowly, carefully, you get lost a couple of times. The second, the third, the fourth time you drive, after a while, you can drive it without thinking. It's the same with every skill you need to master. So in the beginning, be cautious, try it out, because if you don't try, you can't learn, you can't grow. So fear is what causes people not to, they don't even want to try. That's not good. Greed, on the other hand, causes people to try too much too soon. That's not good as well. There is a middle ground. They calculated risks. All right. So let's see. Here's a couple of questions. Copy trading. What should my account size be? Alec, you start by opening, and Ron can help you with that because he's the introducing broker that's helping you. So I can support you, and he can support you as well. You open a profile. You should have one at this stage. That's free, costs nothing. And then you start simulating. You train first. So it costs nothing in the beginning. So you train, you simulate, and you go through the process. How do you choose a strategy manager? How does a good strategy manager with a good foundation look? How does his equity curve look? And then when you are satisfied, you found a few good ones, and you choose the best one of them, and you start small. You start with $100. That's the minimum that you can start with. So it's not a lot. I know with a trading account, you can start with our cents account, also part of training. You can start with even with $10. So that's one of the reasons I love ForexTime, is that the guys are realistic. They're not trying to push guys into something too soon, and that's where most people lose their money. They do too much too quickly. Right. So what we want is clients that can stay with for us for years, build nice big portfolios, either successful traders themselves or building portfolios, of successful traders. Not coming in, blowing everything too quickly. right? We want we want to retain our clients. So be patient and diligent. So I hope that answers your question. All right. Right. So this is what I mean with the foundation. Very quickly, fundamental analysis is when you're an economist, when you study economic reports, political, events, environmental reports, and things that comes out. That's the things that cause the price to move. The only problem is you will never know exactly what's going to happen. You might think, okay, the price is going to go up. I don't care if you're the best economist in the world. You can predict that, you can think, but you don't really know what's going to happen. The other side of the coin is technical analysis. That's where we study the effects of those news events and reports that come out. There, we don't have to guess. We can see what's happening, right? And if you understand the structure of the market, then you can see when there's a change in behavior, when there's early stage of a next trend, just like I showed you there. And I think because it's so important for me, I'm going to quickly jump to the chart. Let's see if I can find that. Can you guys see my chart at this stage? Ron, can you see my chart?
Yeah.
That's good. Right. So what I train the guys with when they come to me, especially guys that's been stuck, that haven't been able to make a net profit over a series of trades, I have to detox them, right? I have to declutter them. They've got so many clutter and other things. I take them to literally to a chart that's only got a price, a line chart, and then we go back a little bit and we see what is going on here. Right, as you can see, this is the structure of the market. The market has an uptrend, higher tops and higher bottoms, lower tops and lower bottoms. This is just very overview, and this is what traders do. They see the structure and they look for those early stages of every stage of next trend gives you a good opportunity. But with time and with practice, that's what you do. You wait and you wait for those. And I have the guys draw this many times over until they can start seeing this early stage of the next trend. That's where we take a calculated risk. And the nice thing is you can always see it in front of you. Even if you go to the right-hand side of the chart, you don't guess. You see, is this an uptrend or a downtrend? You see an uptrend is higher tops and bottoms. If it stops making higher tops and bottoms, we don't care why. That's where the news thing come in. You don't have to be a world-class economist. In some cases, the guys don't even watch the news because they can see the effects of the news. We see change, we see early stage of next trend, and that is where we take a calculated risk and we manage that risk, right? And that is what the successful traders do as well. I'm just going to quickly go to the website so I can show you. There it is. Okay, I think that's the wrong. Can you guys see my web browser? Ron, sorry, I'm going to use you as a sounding board. Can you see the website?
Yeah, I can see it.
Okay, so there is a list, like I said, simple and simple and transparent, where you can see all the guys that are trading. I'm going to look at this guy. Please. This rating doesn't really mean anything, guys. It doesn't guarantee that this guy will make a net profit, will keep on. It doesn't even guarantee that he's got that these guys got a solid foundation. You have to dig deeper. This is just a way of rating them. So if we look at this guy, for instance, and this is, you have to stay totally objective, even if you know the person is trading. I always look at the many days it's been open. Look at this equity curve. Does he have the ability to make a net profit over a series of trades? This is the proof of the pudding. This is the biltong. So this is, if a guy's equity curve or return chart here goes up and down, then you know he's having difficulties. Foundation is not right yet. A guy like this, you can see he's making a net profit over a series of trades. There's a couple of other things you also have to look at. We just haven't got enough time to to dip into them. But this is a skill you will learn how to check. This is one of the steps. There's 7 of them. How to check if this guy has the ability to make a net profit over a series of trades safely for a long time. Very, very important. Let's go back to the slides. So that's the ability that we want. Technical analysis, definition, the proper definition. Yes, we look at the charts, we study market action, but why? A lot of guys don't understand why. There's only one reason, and that's trying to identify the early stages or a new trend in its early stages. Right? That's all that we try to do. Very, very, very important. It's not about how many indicators, even the candle charts we bring in, the candle formations, all those things. If you don't use it properly, it becomes a trap, guys. So very important. And Ron will be able to, you'll be able to confirm this. So right. So there's 3 principles. I'm just gonna very quickly go over this. Why does it work? Why are you able to make a net profit over a series of trades? Because when people buy or sell something, they've already done their homework. You don't have to wonder why. You can see they're buying and selling, right? Second thing is price moves in trends. There's psychological reasons for this, very complicated, but you don't need to know those wave actions, the waves, the up waves, the down waves, the uptrend, the downtrend. Those things are for a reason. We can use that, right? And the last thing is people are creatures of habit. They do things for a reason, and that is what creates these patterns. History repeats itself, right? And this is the core of the market language, right? When I talk about trends, it simply means the price has gone higher. I talk about a top, just to some people call it a peaks and valleys. We just talk about tops and bottoms. Price goes higher, it tries to go down. There's sellers that comes in there, but there's more buyers than sellers in this market, and then the price goes up again. We've got a top, a bottom, another top. Sellers try to do it again. It's not an uptrend yet. It's only when it goes past that second top when it's a proper uptrend, right? Especially in the beginning while you're learning, we're looking for proper trends. That's when there's enough buyers in that move. And this is not just some sucking. This is a definition used by Charles Dow, one of the economists that he and his friend figured out the index, or started the index, the Charles Dow, the Dow Jones index, right? So this is based on his definition of what a trend is. So, and then this is called the uptrend, and this is how the structures I showed you. This is how we identify that structure. We're looking for that early stages of the next trend, right? When we miss the early stage, we let it go. We wait for the next early stage. Very, very important from a business side. The early stages, the risk we take at the early stage is small compared to the potential profit we can make over a series of trades when as we manage that risk, as we take partial profits and so on. Right? If you go into late in the trend, then the profit potential becomes less, and then it becomes very, very, it becomes much more difficult to make a net profit over a series of trades, and that's our aim. Never ever to try and win every trade. You won't be able to do that. We're not forecasters or predictors of the market. We just respect that ebb and flow of the market. I love that word, ebb and flow, like water, like waves, and that's what successful traders do. They stay in the ebb and the flow of the market, right? A downtrend, just the opposite, is more sellers than buyers. Down, it makes a lower bottom there. You can see compared to the others, it tries to go up. Buyers try to go in there. Many times it's just sellers are taking profits, and then it makes a top, but it cannot go, and then it goes down. Now, this is not a proper trend yet. It has to make at least 2 consecutive tops and bottoms, and then break for downtrend, break the second one. According to Charles Dow, then that's a decent downtrend. And then we wait for those early stages of the next trend, right? And we draw that, the structure, we draw that in that way. I see our time is going. We've only got till 5:30. So I'm going to turbo boosted a little bit. Okay, ranging market, very, very dangerous. Lots of guys blow their accounts because they don't have respect for the market. In a ranging market, then that's when there's random tops and bottoms. Okay, so, and this is what we do, guys. We wait for a trend. You'll always be able to see it. We wait for an early stage of the next trend, and somewhere there, we take a calculated risk. We use that wave action. In this case, it would have been a nice trade here. We use that wave action to manage our risk as well. Right, let's see if there's some. I see somebody said lower, higher highs and lower highs. There's a very, very good reason, guys, why I don't talk about higher highs and lower highs and lower lows and lower because people get confused with that. They associate it with candles. Now, it's true when a candle goes a little bit higher than the other one, that candle is higher than the other one, but we're looking at the structure. I'm gonna jump back to my charts to illustrate for you. When I have the guys start out, I need for them to have a healthy respect for this ebb and flow of the market. You can see how the market ebbs and flows, right? And when they get that respect, then the next step is we need to see the emotions of the market. That's where the candles come in, right? And it's a training process. So you learn to see not only the individual candles, yes, they are there, they're like footprints, they give you hints, but we look at still the structure of the market. We look at that ebb and flow of the market. Higher tops, higher bottoms, not only higher, candles being higher than the other one. That's very, very, very dangerous, right? We look at the structure, higher tops, higher bottoms, this flow, this ebb and flow. That is what gives us what makes it very easy to work out the calculated risk you have to do. The one thing you have to understand is in mastering anything, guys, from walking, talking, driving a car, any skill, you start with, you identify the basics, and then you practice those basics, you master them. You try, you learn, you grow. You try, you learn, you grow until you become better and better and better. You build that muscle memory. If you've got the basics wrong, then the thing is never going to work. You're going to get better at not doing it well. Just one example is like tennis that I love. If you learn to swing wrong, then your arm, just gets very, very, very tired and sore after a while because you're not doing it right. You have to get it right and then practice that correct basics, and then that's how you get better and better and better and better. That's how you master anything. It's the same with this thing. At the bottom, at the core of successful trading, is this structure of the market, the early stages of the next trend. That is the definition, in fact, of technical analysis. A lot of guys don't know that, and it causes them no end of problems. And I can't really speak because for many years I was in that same trap. So I tell the guys I've got a doctor's degree in making mistakes. Yeah. So the market has humbled me. It's only after the old gentleman started teaching me these basics, the correct basics, that I got actually, after practice, the ability to make a net profit over a series of. Right. Okay, so let's see where we are. Time is getting limited, and I want some more questions, guys. Questions are a very, very important part of learning. If you don't ask questions, then you stunt your own learning. The more questions you ask, the more answers you get, and as you discuss those answers, what happens in your brain neurologically is neurons and dendrites form. It's physical, it's protein structures that actually form in your brain. That's the muscle memory. That's the memories that build. And as you repeat it, then it becomes stronger and stronger. And that's how you are able to, for instance, if you drive, you get in your car, you go to the supermarket, you get there, and you can't really remember how you drove because 80% of that actions is being practiced so much that it's in your non. So it's the subconscious, and you execute it without thinking. 20% always, you're alert, you're driving, but those actions, the gears and all the things, you do it without thinking. That's exactly the same thing that needs to happen here. You practice this over and over until there's no more emotions. You just see early stage of an trend. You get into it. You see it structurally. You don't wonder. You don't have to guess. And then you start making a net profit over a series of trades, or it starts getting easier to make a net profit over a series of trades. That's what you do if you learn the language. It takes time, like Ron said, and that's what the successful guys are doing, right? But you, as a person who builds a portfolio, have to know this. You have to see how they're doing. Proof is in the pudding. There's cracks in some guys' foundation. They don't take, for instance, calculated risks, or they don't wait for early stage of an extra. And you can see that in the equity curve if you go a little bit deeper, right? Let's take the next step. Okay, I'm gonna skip a few of these things. This is not necessary. Guys, focus too much. I love this. I love this picture, guys. Cats are interesting creatures. This cat is sitting there staring at this grid in front of him. Meantime, there's no covering. If you stare long enough at the problem, then you don't see the solution that is very, very much obvious, and that you can get out of that box anytime. So, and the solution to trading successfully is knowing the structure of the market, using very, very simple way of taking that calculated risk and then managing that risk, right? And practice that mind part. You're going to practice even if you build a portfolio. You're going to practice to simulate choosing good guys, follow them for a while, get to know this, and then you start like a seed almost that you plant. Start small, and then over time you grow that. You grow that portfolio. That is with any business that works that way. Okay, we're going to skip this. I'm not going to go into this. We haven't got time. This is just a very, very simple method that I use, but I think I'm going to jump to the charts and show you a better way. That is something we need, for when we do presentations and stuff, just to give guys a framework. But we haven't got enough time to go into this. So I'm going to show you what we do. We use this wave structure. You can see the waves coming here, up and down. If you're not sure, for the guys who want to still practicing, put it on line chart, see that structure. Lower tops, lower bottoms, lower tops, lower bottoms, right? And then what we do is we have a guideline that we use. We use the Fibonacci's. If you don't know what that means, don't worry. And when that structure happens, there's actually a little bit of a better one. You can see the guidelines that I use. And this is actually also on the it's just a Fibonacci guidelines that we customize a little bit. And then when the market breaks, we don't know why that happens. We don't care. We can see it happening. You see this. You see the market going down. You see it going up. It cannot go higher than the previous ones. When it starts coming down, we take a calculated risks here. We use not immediate orders, but stop orders and pending orders. And when the market goes past there, we know there's already a lower top. When it goes past there, even with 1 point, I know that it's a lower bottom, and structurally wise, this is the early stage of the next trend. I will never know how far it's going to go. That's why I need to manage my risk. So that's why we take partial profit there, and then again, partial profit there as the market goes. And then obviously our last one there, some guys leave that, take profit, and they just take the last profit when the structure changes again. And that's when they're ready for the next trade. So when we practice, when I have the guys practice, I don't want them to guess anything. They must just start building that muscle memory. I have them take 50% here, 25% and 25% there. And they can study, they can practice to stay in that ebb and flow of the market. If the structure changes any place before that, okay, let's look at this one. This is just a very, very short glimpse into the world of trading. Right, there's another early stage of the next trend. As you can see, what happened here is the market, there was a down move, downtrend, lower tops, lower bottoms. Something happened here. We don't care. We see that. We see the pullback. And then when the market starts going up, when it breaks that point, we've got a higher bottom here. There is a bottom. It's a higher bottom. You can always see that. You don't wonder. You don't guess. You see that. And then if it goes past there, even 1 tick, 1 point, I take a calculated risk there and I start managing it by taking partial profit there. And the market was not very, very, very generous. Sometimes the market is very generous, sometimes not. I took my risk management, take profit there, and the market structure changed, and there I took the rest, moved my stop loss. That's why I protect, where I get out. So there I had some nice profits there, nice profits there, nice profits there. The market was not very generous. That happens sometimes 2-3 times in a row. So that's why we take a calculated risk. Right. Right, guys, I see the time is flying. So I've given you a good overview, I think. Is there any... I see there's a couple questions. Nice. I like it. Right. Walter's asking about a moving average, a 50 moving average to identify the trend. Let me explain. That's a good question, Walter. Indicators do have a place if you have a healthy respect. If you know this structure of the market, then you can use indicators just visually to confirm for you, or to make it visually give you more confidence or something. Can you see this? Can you see these lines I drew just to identify the structure of the market? Now there is an indicator. The only problem, guys, with indicators is all of them are lagging. All of them. What I'm going to do is I'm quickly going to put in the moving average that Walter's speaking about. That's one of the things. A simple moving average here, and what you will see now, I'm going to make it, let's make it green. Right, what you're going to see, okay, now this is one is too far off. Let's use this one. It's a bit closer to the price. Right, weighted one. Sorry, wrong place. Now what you'll see is almost not as accurately as my own trend lines here, but you can see this makes it easy to see. It's almost like a dynamic trend line, right? So that's one of the you can either use the 34 simple or the moving average weighted, the 50 weighted average one, like I've done here. And now you've got an indicator that instead of drawing to the hand, you can see the trends, the ebb and flow of the trends, but it's not as accurate as the as the lines that I drew. And that's part of the problem of indicators. They're always lagging, and they take away the accuracy. What happens a lot with the guys when I start training with them, they've got 20 indicators, so they almost can't see the price. And as they understand what I mean, and they get rid of the clutter, then they keep perhaps one or two to help them, but they actually focus on the structure of the market. Your accuracy of your trading just becomes much better. Your ability to make a net profit becomes much easier. To make that net profit when you stick to, you're close to get you to the physical structure, right? The earlier you get into that stage, the less or the more profit potential you've got, right? So I hope that answers your question. Yes, indicators are allowed. Support and resistance have a place. Elliott waves have a place, but it can enhance your trading. If you don't have respect for the structure of the market, then you will pay for that. So sometimes you will think the market will go up. That's the problem with those indicators. They make you think you know what's going to happen. But if you ignore the structure, they cause deep drawdowns into people's accounts. And I can just highlight this for you. You can see this guy looks like he's making good, and he is a good trader, but he's got this crack in his foundation. These deep sudden drips means there's a crack somewhere. I don't know objectively. I'm guessing that, and you can actually go and check. We don't reveal their strategies, but you can go and check if you know the language of the market. What happened here. You can see what he trades, and you can go and deduct that perhaps he's trading with too much of his account or whatever. He's listening to an indicator and then not the structure, but the result is the same, guys. This happens, right? This is not to say that a guy with a good foundation will not have drawdowns, but it will be more controlled, right? Not suddenly very sharp. That's a danger signal. Right, guys. Time is getting short, so I'm going to give a chance for the. Let me put up, my email. I think it's the best to talk to Ron first. Yeah. Let's say that he's introducing brokers. If you've got questions, speak to Ron. He will refer you to me if there's any questions that that he wants to. So we'll take it like that. Walter is asking, is it easier to identify a trend with a line chart or a candle? Walter, a very good question. Thanks for that. When I start the guys off, I put them on a line chart just to declutter them, right? It's because they've gotten so used to indicators and actually leaning on the indicators and not on the structure that they don't see the structure, they don't understand it. So it takes some time for them to detox, to get the that bad habit of looking at the indicators, to practice that out of their system. Then I tell them to, I call it sitting on the beach. I call it sitting on the beach and watching the waves exercise. So they have to put on a line chart and just go back, identify that structure, see these waves ebbing and flowing in the market. And what happens psychologically is you start realizing that, whoa, this is real. I can see this. I can practice, and I can actually get the ability to take a calculated risk to see these early stages of an X trend. But unfortunately, you cannot only trade with this line chart. This is a closing price. What we do need is we need the candles. But then again, we don't look at each individual candle. We look at the ebb and the flow of the market. The candles, what they do is they give us the emotions of the market. I need to see there, because those candles are helping me to get to identify good entry points. For instance, there we have a very, very clear uptrend, higher tops, higher bottoms. Something happens here, price goes down. There's not a very good wave action there. You can see a beautiful wave action up and down, and I will use that wave action. Early state of a next trend, I will use my guidelines there. No, sorry, not that one. There. When the price goes down, I will wait. When it goes up, I will wait. When it starts turning around, then I realize the market is warning me. I've got that. The price couldn't go higher. Something happened, something changed. That uptrend is not valid anymore. And as it goes down, I would put a pending order here, a sell stop in this case, and would put my stop loss there. There's my first take profit, second and third one if I'm practicing. And then it gives me the ability to make profit. If the market structure changed here and went around, that's very easy for me to take my first, for the market to reach my first take profit. And then immediately when that happens, when I've got that first partial take profit, then the mental stress is lower. And you want to keep your stress as low as possible. Stress just releases emotions, and that's what wrecks a lot of guys. They're trading. So we use not the line chart just to train your eye to see that, and then the candle chart, Walter, to look for that. To look for that ebb and flow of the market, and we use the candles then to identify the emotions of the market as well. And they show us exactly structurally wise, where's our entry, where's our stop loss, right? It's not always obvious. You can see that even though the principle is the same, lower tops, lower bottoms, higher tops and bottoms, because it's a different point in time, it's different people buying and selling here, the structure is never 100% exactly the same, right? Very important thing that makes it difficult for guys that want to know exactly how much, what is a pullback, what is a lower top and lower bottom. Is it 2 candles, 2.5 candles, 3 candles? Guys, it's never the same. The structure is there, but you have to train. That's why it takes training, for guys that are successful at trading to learn to understand this. Sometimes you make a mistake, you think it's like that, and it changes. But as you practice, your mistakes gets less, and you get the ability to take consistently good trades. And good trades, guys, have got nothing to do with a profit or a loss. A good trade is when you identified that early stage of an X trade. You took your calculated risk and you managed your risk. And if that risk means, or that managing that risk means, if the structure change, you have a loss, then it's a good loss. It's still a good trade, right? Don't protect your account. Don't use stop losses and see your account wiped. That's not good. A bad trade, on the other hand, is very, very simple. I don't care if it's a profit or a loss. That's if you didn't respect that structure. You didn't wait for early stage. If you didn't take a calculated risk. If you trade with too much of your account. if you don't manage that risk, if you move your stop loss into the structure before the market told you to, bad trade. I don't care if you make a profit with that. If you don't take your partial profits, yeah, if you if you take it too late, if you enter late, that's a bad trade, and we cannot afford that. Your ability to make a net profit over a series of trades will diminish if you take bad trades, if you don't respect the market and those things. While it improves if you take you take good trades, right? Yes, Walter, there is a way that you can take partial profit. Then you can either manually take it, or you can do what we do. I think this is my last one. I'm over my time already. My wife is quite good at keeping the borders between the business and personal life, and personal life is important, family life. So she'll come warning me here sometime. Right. So I told her 1:30. So what I normally do very quickly is, for instance, if I wanted to take that trade there, let's say we were at the edge of the chart, and I saw that movement there, and the market was starting to come. I would take a pending order there, and what I would then very simply do is, if I do my lot sizing, if we train, then we don't care about that. Let me use that. If I take 50% of my profit there, 25 there, and 25 there, then I would, if my total position is 0.04, I would very simply, it's one trade, but I split it into 3 positions. 0.02, I would put the 0.02 trade there, entry there, let's go back, entry there, stop loss there, and the take profit will be there. Right, then 50% of, when it gets there, 50% of the profit is in my pocket. Right, but it's not done yet. Remember, it's one trade, 3 positions. I'm splitting it. So the rest is 0.01, that's 25%. And I put in that second trade, entry there, stop loss there, and my second take profit is there. When it gets there, 25% in my pocket, and then obviously the last 25% is a third trade there, and I put that entry there, stop loss there, and the take profit there. So the market reaches there, I'm out. The nice thing about that way of trading, it doesn't work on the 1 minute because it's too fast, or the 5 minutes. But if you trade the 15 minutes, 30 minutes, there's enough time to place those orders, to split your one trade into 3 positions. What's nice about that way is that those orders is on the server. You turn off your computer, and the server, the trades are still on. The take profit is there. If the market, while it's overnight or whatever, engages, if it's longer term charts like 4 hours or dailies, if it engages, it's engaged. If it gets to your first take profit, it's done. It's in your pocket. Many times I take a trade in the evening when I see a good early stage of an next trend, and the next morning I've already got my profit in my pocket. Or the structure changed and my account was protected. I had a loss there, and it's good. I protected my account. Either way, it's a good trade, and then that's where your ability to make the net profit comes from. Right. So I think I have to switch over to Ron now. Ron, if you have any closing comments, guys, I know there might be a lot of questions. Ask Ron. You can answer a lot of them on the website. We've got recorded webinars where you can also get answers. So otherwise, he would refer you to me. And that's what I do. I've got a deep passion for this language of the market. It not only changes your life, it changes other people's lives as well. And that's why I love this training. I love helping guys to see this, to get to this, and to see this opportunity to actually start building assets. Because if you start understanding this language, then you see opportunities in other asset classes as well. All right, we just bought a house. Me and my family, we were renting for a couple of years, and we realized, we need to get into the property business again, but we lost everything, a couple of years back, and we got a house in a good area, very dilapidated house, but it was in a good area. Price was very, very good. We scraped everything together, and we got it, and that's also part of trading. That's now we in the property business. We got it at a good price. So even now, that the market is not so lively. You know, we've got some capital growth already. So when your eyes starts opening for this in all the asset classes, you can start seeing opportunities and ways to train yourself and ways to get it. Ron, over to you. Anything you want to say in closing?
Thank you so much for the presentation, Theunis. I'm sure it really helps out a lot of the guys who are here. Well, it's just Alec and Walter now. Just in closing, I'd like to say, if you need any help with trading or building a copy trading portfolio, which Theunis introduced us to, then you can always send me a message, either in the group chat or a personal message. The other thing is I can also help you out with your own trading. What we're doing is we're running sort of a mentorship program. And let me just share my screen here for a second.
Sorry to interrupt, Ron. I just saw that while I was busy presenting, I didn't see that Terence Europa was waiting in the waiting room. So, Terence, I'm very, very sorry. We did record this, so you can ask Ron. I'm going to give over. I have to leave now, so I'm going to give over I'm going to make him a host. So he did record it, so you can watch it if you want. Very, very sorry, Ron. Giving over to you. I'm going to make you the host because I have to leave. So thank you guys, and please continue.
All right, thank you, Theunis. Yeah, well, I was saying, well, as for us, we can help you with your trading, and I was about to share my screen. Now, what you'll see on my screen is, well, okay. Just a second here. Right. Okay. So as I was saying, we do run a mentorship program, and we do help traders to develop their own abilities. Here are 3 of the traders that we've been training for the past month or so. You know, you'll see the 2 traders here who have a very healthy equity curve. And there is one who, in my opinion, was taking way too much risk. But yeah, we can do this kind of thing for you if you are looking to trade on your own. And with that, does anyone have any questions before we close the presentation?
Hi, Ron.
Hi, Alec.
Fine. I wanted to ask, with the mentorship program, do you have a certain place whereby the offices, whereby maybe somebody can come there sitting, or it's just based online?
For now, it will be based online because of the risks associated with physical meetups with COVID-19.
Okay.
But in future, we will be having it physical. Well, if you are near the CBD, then that's perfect because we're based in the WeWork office at 80 Strand Street.
Okay.
All right.
Yeah, and the other question that I wanted to ask was on copy trading. So let's say I'm doing a copy trading, I copy to your account,
Right.
but my account only has got, let's say the capital that is there, it's $100. Yours, I don't know, let's say it's on 10,000 or whatever. When it affect maybe when you place your trades, when you put your volume or your lot sizes, when it affect me because of having a smaller account?
Well, it won't affect it at all. Because say, for example, if you've got an account, right, with $100,
Yes.
and I'm copying you with $10,000. What happens is when you place for example, one lot position with your $100, everything is copied in proportion to my account. So that one lot on a $100 account, on a $10,000 account will be 100 lots. I don't know if that makes sense.
Okay, I hear you. Yeah.
Okay, yeah. So everything within the copy trading accounts is copied in proportion to in proportion to how much capital you have in the account.
Okay.
Any further questions regarding copy
Nah, thank you.
trading?
Ron, can you hear me?
A bit faint, but yeah, I can hear you.
Okay. Just to get clarity here, so we need to open up account with FXTM. Is that correct?
Correct.
Okay, and then we need to obviously transfer funds across, and then we will find a mentor, one or two or three or four mentors who we will copy. Is that correct?
Yes, you can do that if you're looking to go the copy trading route.
Yeah. Okay. What is the other options here you got? Is it training?
With regards to the training, we can actually offer you training.
Yeah. Okay. Yeah. The problem is I do work. I've got my own small business, so I don't have the full day to sit and obviously listen to training. And even the copy trading is difficult because while you're working, you're getting you're getting signals coming through. So yeah, I don't know what's better. But what so your idea is basically for us to use your guys and obviously increase our chances. You guys can and we can obviously make money. It's the ultimate goal. Is that correct?
Correct.
Okay. So.
Okay, continue.
No, that's fine. So how do we? Are you going to give us some more correspondence through the group?
That's the goal. Yes, that's the whole point of the group.
Yeah.
As for what you can do, given the fact that you are busy,
yes.
The one thing with copy trading is you don't have
I'm in a meeting.
the trades. You don't have to execute the trades manually. What happens is when you link your account to one of the strategy managers is every time they take a trade, the exact same trade is copied into your account, and you don't have to say on WhatsApp and receive the signal and then execute. So that's
auto trading.
Correct.
Oh, okay, that's great. Okay, so you will give us some more information, and obviously we need to open up an account.
Oh yeah, definitely. I'll send that through into the group. I'll send the copy trading information into the group. There's a really good short video that explains exactly what it is and how it works. So I'll make sure that you fully understand everything before you open an account and put your funds and all that.
Yeah. Okay. The other big question is how secure are our funds if we do the auto trading? What are the chances of us losing a whole account?
Well, that would depend on the strategy manager that you choose. But the good thing about the FXTM platform is the fact that they have certain risk management tools that you can use to protect your initial deposit. So if, for example, you deposit $100 into your account, right, and you start copying a trader, and this guy's a complete cowboy, and his account equity drops to 0. What FXTM allows you to do is it allows you to close all trades the moment your account value hits a certain level. So by default, that's set to 50%, and you can set it anywhere between 50 and 90% of your initial deposit. So If that guy's equity drops say from 10,000 to zero, you as an investor will then only drop from say 100, your initial 100 to 50.
Oh, okay. And okay, who are these guys now that you're talking about? We're going to use for the copy trading and auto trading.
Well, they're traders all over the world. Basically, they're FXTM clients, just like you and me, and they've got the experience, they've got the skills to trade, and they're willing to share that strategy with others.
So who chooses them? Do you choose them for us?
You actually choose your own strategy manager. So what I'll do is I'll also link a list of all the strategy managers on the FXTM platform that you've got to choose from, and I'll also give you a report sometime within the next couple of months of some of the strategy managers who I think are best, but the ultimate decision is with you.
Okay, so you do make recommendations.
They're not exactly recommendations, but yes, I will give you some guidance on that.
Okay, well, it sounds great. Yeah, just if you can give us some more information in the group there, and then I'll just think about it, and let's see if maybe we can start something soon.
Not a problem.
Okay, thanks.
Thank you for the questions, Walter. Is there anyone else who'd like to ask something before we wrap it up? Okay, all right then. I guess I'll assume no one else has a question. I'll send more information about copy trading into the group, along with a link to this recording, and I'll probably include further training that Theunis has done in the past, which I think would be very helpful for those of you looking to trade on their own accounts.
Okay, Ron. Just another quick question. Sorry. So the copy trading, would that also be sent out via the Telegram?
Yes. I'll send the copy trading information via Telegram.
No, okay. Well, whoever we use to take the trades, do they send it via the Telegram?
Oh,
you
no,
join the group.
They don't send them through Telegram. What happens is everything happens in your account. There's no notification of when trades are made.
Yeah, okay. That's if you're auto trading. What happens if you're doing it copy trading without automation and you place it manually yourself?
Oh, that option isn't available.
Oh, okay.
Yes, it's all automatic.
Oh, okay. No, okay, that's great.
Yeah.
Okay. Thanks, Ron.
But anyway, I'll send the information into the group, and with that, thank you very much for everyone who attended. I definitely hope we can have more of these in the future.
Yep. Thanks, Ron.
Cheers.
Cheers, bye.